And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Tuesday, October the 19th. Welcome, friends, family, fellow futures and Forex traders, fine feathered friends and furry friends as well. Good morning, everyone. If you were around back in 1987, this was a very, very ugly day in the stock market. If you think about it, it really wasn't all that bad compared to the prices these days. I remember the Dow ended down around 504 points on Black Monday. That was back in 1987, 34 years ago. I was only 2 then, but I was already working on the trading floor. And it was a very scary weekend. I don't think anybody slept. We didn't know what was going to happen on Monday. It started on Friday and followed through on Monday. We're probably not going to see anything like that happen today. It is a full moon, and as my daughter informed me last night, that that was the last night of Mercury in retrograde. So at least we've got that going for us, whatever that is. This morning at 7:30, the housing starts and permits number came out. We do have 3 talking Feds throughout the day at different times. We've got Bullard speaking twice today, 7:15, noon, and 1:50. So we'll, of course, have to keep one ear or one eye on something that they may say. Dollars has weakened a little bit as U.S. factories are starting to feel the pinch of supply chain issues. Apparently, our Fed Chair Powell has had some well-timed stock sales that have come across the desk of some regulators. It's kind of shading, perhaps, his opportunity to remain the chairman for a second term. Especially after ousting 2 regional Fed Reserve presidents last month. It is earnings season, as we know. We have Johnson & Johnson, Procter & Gamble, and Travelers Insurance already out this morning. One of the biggies this afternoon, Netflix is coming out, as well as United Airlines. So there'll be a lot of focus on how our earnings are doing. As usual, I'm going to ask you to remember to like, share, comment, question, feedback, and heckling. As always, welcomed. Make sure you subscribe to our YouTube channel. Taking a look at the VIX this morning, down about 2% as equities continue the grind to the upside. 16, that number in the VIX. It's a pretty low number. Dollar index also off a little bit this morning from its close yesterday, about 1/3% down at 93.64, and the 10-year yield continues to creep up 1.607% this morning. Last I checked. As always, thank you for joining me yesterday for group coaching. We've got group coaching again tomorrow. We're doing it 2 days a week now, Monday and Wednesdays, always at 1 p.m. Central. And I was very happy to see a lot of folks join me yesterday. I was the first one, and hopefully you had a good session, and I answered the questions well, and it was a benefit to you. That's the whole point here, is we are looking forward to your success. As always, got to say good morning to everyone. Ron Kim First one in the room this morning, Ron. You win the prize. Theo, good morning. Dead letter opener. Rock and roll. Brian, Vince, good morning, sir. George, Chris, Harry Gordon, good morning. Janus, Mr. Templeton, good morning. Spencer, UG, Rob Kennedy, Dylan, Frederico, Walt Rhines, Chris Hayes, Harry, good morning. Ryan, Theo, good morning, everyone. We got a Theodore and a Theodora in the room today. Good to see everyone. Ricardo, Zerain, Walt, really enjoying the earlier forecasts. Well, good, Walt. I'm glad. If you just discovered it, we're happy that you're here, and that's our goal. Is we're going to be looking at these specific markets: the crude, E-mini, S&P, Nasdaq, gold, euro, the 10-year, and now new to the forecast, the nat gas. But we're always focusing, as always, on context, good risk management, and remaining very patient, which for me yesterday ended up paying off very well. I didn't lose a lot yesterday, in other words. So Zerain, Walt, Patrick, I got lost here a little bit. Alfred, Michael, Robert, well-timed. Yeah, you guys like that. As if they're not always well-timed in their investments. Jerry is awake. Hopefully John is too. Good morning, Jerry. Stephen, Noel, I should say. Thanks for the group session yesterday on my birthday. All right. Well, happy birthday, Noel. I'm glad that you were there and you found it useful. George, Tova Rain Song, good morning. Gotcha, Noel, and Rob T. Good morning to everyone. See a couple of new names there. Welcome to the market forecast. As always, looking for good risk management. Context is always very important. And staying patient. And Mondays are days that I know to stay patient. I had a little bit of a short bias to the S&Ps yesterday. The rally that we've been seeing of late has not been all that impressive, at least to me. We haven't been bringing in open interest. Volume has been relatively low, even in New York. So that's what tells me that the move to the upside may be getting a little bit slower. But I was wrong yesterday. We saw some open interest come into the S&Ps, come into the Nasdaq. So it's a new day, a new situation. We're going to see what we're seeing in these markets. Yeah. Spencer saying, interesting, these Fed officials decide to divest themselves of their portfolios just before taper talk starts. Yeah, they're always very well timed. They're very well connected. They have good information. So maybe we should just watch them and do what they do. All right. So let's jump into the charts here. Let me get set up. Make sure we've got the daily in crude all ready to go. We see some overnight inventory already affecting the market before the open. Well, let's have a look. Okay, so daily in crude, we're all well aware that we've got some supply issues going on here in the U.S. as far as energies are concerned. We got a little bit of a relief break yesterday. We lost 7,700 in open interest yesterday, which I kind of found a little bit interesting, a little bit of long liquidation, a little profit taking perhaps yesterday, but the upside structure still remains strong, and we can be relatively sure that increasing demand is performing supply, at least for now. We're going to have to see how these things play out. I'm seeing people talking on the news about $200 a barrel crude oil. I would hope that our leaders, if you will, would respond to those kind of prices long before we get to that level. I mean, we're talking about $20 a gallon gasoline. It's just can't happen. It's going to absolutely destroy the economy if that happens. So But we're still looking at, a little bit of a demand issue, a supply issue, and some increasing demand. We have the API this afternoon. We have EIA tomorrow. Maybe we'll get some more information on those. But we have an inside extended trading hour range, at least for now. Take a look at the 30-minute chart. We had some overnight longs in this market that have already decided, even before the open, that, hey, you know what, we may not get paid on this. So already we see settlement here, 81.69. And, overnight longs reconciling here just before the open kind of bums me out, because I look for these things to happen after the open so I can take advantage of them. But all it's doing is really bringing us back into range and into value, which allows me to relax a little bit and look at the opportunities that come as the day goes on. When we open in range and in value, and sometimes even very close to the settlement price, I find better trade locations happen as the day goes on. I may not need to be involved right on the open. Now, if I finally got our 1 minute chart to show us if the opening range is one extreme or the other, I will take a look as crude oil opens. But for now, let's move on to the E-mini S&Ps. Resilience rules. Look at the volume. Volume has just really been falling off as price continues to move higher. Until yesterday, we had largely open interest falling off as volume was falling off in the upside move, which led me to believe that this was probably a little bit hollow. But what occasionally happens is higher pricing brings new business to the marketplace. Did we see some new business? Not necessarily seeing it in volume, but we did add 15,000 in open interest. So we've awakened some buyers to come into this market. If you remember, all the way up, we've been losing open interest on lower volume. That's not a very good sign for continuation. But yesterday, we had buyers to the rescue. Buyers to the rescue. Don't forget how resilient these markets are, and if there's no bad news, the market just continues to grind to the upside. And while it looked like a big directional move yesterday, it didn't act like it. It just really seemed to take forever for it to grind higher, although it did look like a relatively emotional profile by the end of the day. A P-shaped profile that indicates short covering, and by open interest, thinking that we also met new business coming in. So without no new bad news, the game is on to the upside. Here's the 30-minute chart. All right, so here's yesterday's profile, P-shaped, indicating, potential short covering, new longs coming into the market. Look at what we did overnight. We've got some overnight longs already looking to perhaps reconcile. We've got a gap to the upside. We've got overnight longs. We've got a kind of a target-rich environment right here in the fact that we have the value area high. We have point of control here. We've got the range high, value area high, and settlement right in the same neighborhood. Again, we're opening with a gap to the upside. If we can't close the gap relatively early, subjective term, I get that, we'll look for opportunities to buy weakness. The overnight inventory adjustment that is already underway might be just enough to give us that weakness to look to buy. If we open outside of value and reaccept inside of value, I will look for an opportunity for the price to rotate at some point during this session all the way to the low of value from yesterday. It's going to be an interesting trading day, as they always are. It looks like I am lost. Apparently, I've lost my ability to see your questions. It looks like I'm still moving here, so I'm going to press on and see what happens. We've got 8 o'clock now. So back to the S&Ps. 45.20, important inflection level. Okay, it looks like we're working. I'm just not going to get any chat. All right. So overnight longs, gap rules. Let's see if we see anything here on the open here in crude oil, the opening range. We got the 1 minute. Let's see if it's working. So yes, the 1 minute is working. Here's the high. Here's the low. So a pretty big opening range here in crude oil. 92. Yeah, not too big. So we've just taken out the low of the opening range. We have overnight longs already kind of capitulating. I'm not taking this opening range trade because of that. If the market opened here and left that opening range up here and started heading back towards settlement, I would look to do that, but not now, because the market's already kind of reconciled back into value and towards the settlement price. Right. Now let's look at Nasdaq. Same but different. Resilience. Convincing open interest boost above the weekly kickoff high yesterday, adding 2,500 in open interest. Not great volume, but at least we have new buyers coming into the marketplace. So all bets are on for continuation to the upside until proven wrong, right? Anything can and will happen. Volume is just okay. What are we looking at for our day trading here? So emotional looking move to the upside, breaking out above our weekly kickoff high, which was 15,190, settling right at the high of this session. The grind to the upside is underway. We've got overnight longs already sort of reconciling. We've got this 20-session exponential moving average, which looks relatively interesting. If we can't close this gap, this may be somewhat supportive for us. But again, we're still 27 minutes from the opening bell. So you're going to try and stay patient. I don't see any reason to necessarily get in too early. I'd love to see the market pull closer to a gap close and then look for opportunities at that point. Now, again, if we open with a gap, remember the value area special situation play, thanks to Jim Dalton, who says he doesn't really listen or play it too much because I think it's it can be really a hard opportunity to catch. But if we open outside of range and we reaccept inside value from yesterday in the Nasdaq, this is a really substantial trade. If we open outside of range and value and reaccept inside of value, there's a probability that states if we do accept inside value from yesterday, there's a probability that says the market could rotate all the way to the low of the value area from yesterday. So that is a substantial move to the downside. We've got plenty of things kind of in our way. We've got settlement. We've got the high from yesterday. We've got value area high. We've got this 20-session exponential moving average. There's a lot of things that are kind of standing in our way to being able to get to that. So as long as we can't close the gap, I'm looking for opportunities to buy weakness. Gold. I'm still just hoping you guys can hear and see everything. I'm I've lost the ability to see your chats for some reason. And all right, so I see we're on gold. All right. Downside move to previous balance. Okay, this was Friday. Big emotional range yesterday. Losing 2,800. Low volume. This area of balance has pretty much used up its ability to facilitate trade. What is the market's job? The market's job is to facilitate trade. So it kind of makes sense that we spent one day doing pretty much nothing down here, and we've got a move to the upside underway. Yesterday, we lost 2,800 in open interest. Makes sense. Let's see what happens today. Very low volume yesterday. Got a pretty decent move back to the upside. We're kind of volleying from high to low, At least that's what it looks like for now. What's the 30-minute looking like? Overnight longs. Settlements all the way down here at 1765.70. It's a lot of overnight longs. Initially, we had left our opening range at the high of the regular trading hour session, but we really didn't get much of a pullback towards the gap close or yesterday's range here, did we? We got a nice little push. That was about it. This red box here represents the opening range, and we've just taken out the high of that opening range and the high of the overnight session to a T right now. Is this opportunity for us to continue this move to the upside? It's not the best trade location, but it may be what we need to be thinking about doing. We've had very little effort to try and go close the gap to the downside. Gap rules, we trade in the direction of the gap. We're looking for longs. I'd much prefer to buy longs on weaknesses instead of paying the all-time high, or the high of the session, I should say, in order to do that. So I'm going to try and stay patient. If I miss it, it's not going to be the worst thing that's going to happen to me. And for the euro, we have a potential for a pretty decent breakout to the upside here. We've got one shoulder, one head, one shoulder. If I'm using weekly kickoff high as the neckline, and we've broken out above the neckline, our next target is all the way up to here. That puts us up to around 117.60, which is pretty close to this swing high. So there's a few things that are visually taking us up to this level. We're going to need the dollar, of course, to cooperate by falling a little bit. Started to do so far today, but this breakout of this neckline, when we take the neckline to the bottom of the head and we extend the neckline higher, that's the measured target for a head and shoulders pattern. We don't know if that's going to happen, but we'll see. Overnight longs. Okay, we've already seen a bit of an adjustment to the downside. Inability for us to close the gap, or so far even test down to our weekly kickoff important inflection level here, weekly kickoff high. We've got a gap to fill up here. We've got another point of control above that. So there's visuals for us to take a look at and for us to focus on and to perhaps bring price to. Again, gap rules. It doesn't make it any necessarily easier, but if we can't close that gap, just makes sense that we are going to look for opportunities for continuation to the upside. 10-year. Okay, we had a bear flag breakout to the downside. We had a bear flag breakout to the downside. We're still looking for a measured move down to our current weekly kickoff low, which is 130 and 9/30 seconds. We had some pretty decent volume yesterday and a 40,000 contract increase in open interest. So we're starting to see more sellers coming into this market. Are we going to end up getting them too short? Are they longer time frame? Are they shorter time frame? going to be looking at maybe medium to longer time frame traders on this move to the downside. I don't think it's necessarily done, but nothing ever goes straight to our targets. Take a look at the 30-minute chart now. So, no real overnight position. Were we accepting yesterday's area of value? I would have to say so far, we most certainly are. We've got 7:30. We've got one 30-minute bar closing inside value. We are going to have another 30-minute bar closing inside of value shortly. So that's going to tell me to stay patient. I'm going to be looking for opportunities at yesterday's extremes or the overnight extremes before really looking to get involved with anything. We've got naked points of control higher. We've got a gap higher from, what is this, Friday to Monday. So this gap still remains unchecked in regular trading hours. We checked it last night in overnight hours. So I'm going to try and stay patient and be really just allow this market to come to me and say, okay, here's your opportunity. I'm just going to be keeping one eye on it because there may be some sort of opportunity. Now to the nat gas. All right. Yesterday we talked about it, and it seemed almost impossible because coming into winter, everything that's going on in Europe, that we could have put in a kind of a recent high here in nat gas. The market is setting up technically for a pullback, which we see happening. Here again, we have a head and shoulders. So if this is our neckline right here, we've broken out below the neckline, and our measured move takes us all the way down to around $44.12 and 11 cents, $4.12 probably. Is that even possible? We've got this swing low to get through before that. However, when we broke out below this weekly kickoff low, we lost 8,700 in open interest. Man, that's a lot of open interest in the in the nat gas to lose in one day. Volume has been maintaining while we've been coming off the highs. What are we doing today? Well, we're opening with a gap. We're going to see if we close the gap. So this head and shoulders, there's two steps to this. I mean, if this is our neckline, the measured move is a lot deeper. If this is the neckline, it's even deeper than that. Still have to get through that level there. Okay, so nat gas, we had a gap, a weekend gap, still remains. Driving lower yesterday, long liquidation just by the number of contracts that we lost in open interest. Settlement is here for 989, and we continue to try and to push to look lower. We've got some points of control. We've got some visuals to look at down here. And, did we close the gap? Have we closed the gap? We have not closed the gap. So it looks like we're starting to one time frame lower on top of that. So it's going to be difficult to try and get into a move to the downside here. As long as we continue to one time frame lower, I do not suggest trying to step in front of it. So I'm going to, again, be patient, looking for structure with which to lean on to limit my risk. So important for us all to remember to limit our risk. Don't forget, we have Mercury coming out of retrograde and a full moon. I'm going to be thinking about some of my old friends from back in '87 when we survived that absolute terror that we all felt that day in 1987, and see if I can call up a few of them and see how they're doing. But boy, that was sure something that day. And I apologize again for not being able to see the the chats here. If you guys are asking questions or anything, I'm unable to see them. I'm hoping you can still see, and we will check it out. And if we had a problem today, I do apologize, and we'll be back at 11:30 for the coach's playbook. We're going to be talking about ranges versus breakouts versus trends. Should be a good one. I'm looking forward to it. So we'll see you then. Until then, trade well. I'm going to take my deep breath. You got about 15 minutes here before the equities open. Take your time. I will be looking forward to seeing you in the pit in just a few minutes. Trade well. And again, we'll see you at 11:30 for the coach's playbook. Trade well, everybody.